Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Okay guys, now let's have a look on the gold market. So in general, as on the euro currency and the gold, the trading setup that we have prepared in the weekend, in general works fine, and actually we have got the targets as on the euro. It's completed upward action right from the area that we have discussed, although it has happened mostly by the end of the week, on Thursday. We were waiting for a couple of sessions, excluding the Monday, which was the President Day. So in 2 sessions, market has prepared the background with the retracement, and then upward action starts. The same on the gold market. So once it has become clear that market on Tuesday that we will not get downward continuation here, we have reversed this scenario, telling that we expect taking out of the top. And yes, the market also completed the target that we have specified. 29.55 has been tested. We have recommended this target instead of 29.64 just because market is overbought. On the weekly and the monthly chart, when you're using targets on existing position, it's better to use closer targets, more contracted targets. If you're planning to take the position, then probably it's better to use more extended targets. So what we're going to do now? For today, I do not see something that is necessary to do. Today is Friday. Target is completed, market starts showing the reaction, and I don't think that we need to take something to hold it for the weekend. So in fact, on a daily picture, the major question remains the same. So we need to understand what will happen with the potential double repo, whether it will be formed or not. But the truth is that if market indeed start forming the double repo, it definitely will manifest itself. We do not need to be actually trying to anticipate its appearing. It's not forbidden, of course. You could try to use some patterns that stand on the lower time frames to take position in advance, and that's not the problem with this, not something wrong. But if even you are not doing this, don't worry, because if double repo indeed will be formed, the market will manifest itself. So we will see some good bearish performance on intraday charts, so that we will not have any doubts that everything goes with the double repo. For now, yes, we see some reaction here, but it is still stands too small. Although we could say that, well, in general, this type of action that we see on top is a good sign for the double repo. We see that market actually shows spikes above this top, and now all the price action stands below the lows, which starts smelling like kind of the just wash and rinse of this top. This market returned a big down. If, for instance, we would have a price breaking the top and standing above it, holding above it, this will be bad sign for the bearish pattern, mostly pointing on a possible bullish continuation. But for now, it's minor decreasing, although it's not really fast. But this is well, things that actually stands good for potential double repo. The most active part of this pattern probably should be formed next week. So next week we probably should get the answer whether we will get deeper retracement here or not. On the lower time frame, I do not see lots of things to consider. Probably some just hints on a possible bearish activity. So first is the divergence. You could use either these two tops, or you could use even these two tops, doesn't matter. So anyway, we have some divergence here. Any kind of the narrowing wedge patterns, rising wedge, that potentially also might be bearish. But market still stands inside of this range. On the hourly chart, butterfly, minor butterfly, has been completed precisely as 29.55. Its minimum target already has been done, so you know that minimum target of the butterfly 30% retracement, and actually it has been completed right there. If you have taken position, bearish position here, that's great. So if you possessed yourself with the butterfly point reversal, if you initially place stops, for example, above 29.64, now you contracted it lower, I see no problems with it, and just you could keep this position for the weekend. If not, what we could consider here is the kind of the hand shortage is forming. So maybe we will get some progress with this pattern next week. Currently, the performance looks a bit choppy, but the shape of the hand shortage could be seen. If you would like to take position before the weekend, do not want to postpone it on the next week. Probably you could try to do this, but risk for that will be now above the 29.55. So you will have to place your stop somewhere above this area and see what will happen. That's actually towards what we have. But if downward action will accelerate here, our plan will be to take the position on some retracement for the week on some pullbacks to the fib level. So trying to find a rally to sell. That's towards the strategy that probably we will follow if everything will go indeed in a direction of the double ripple pattern. But that's already the story for the next week. For now, as you could see, you could consider some scalp short position probably, but for now, on the long side, I do not see a lot of things to do and prefer to wait until the next week.